We all know there's been a lot of gloom in the real estate market recently, but the latest CPI report may have changed things. In this video, we're answering your burning questions on should you buy now or wait, will interest rates keep coming down, and what does future appreciation look like for real estate? And we're also going to take a look at what we've been seeing in Pittsburgh's real estate market. If that's the information you want, we're going after it right now. Hi everyone, I'm Riley Madden, a well-established real estate agent in Pittsburgh, Pennsylvania with eXp Realty. If this is your first time here and you want to learn everything about Pittsburgh real estate, Pittsburgh neighborhoods, and really what's it like to work, eat, sleep, live, and play, all here in Pittsburgh, make sure you start by tapping that subscribe button and click that little bell so you're notified every time we come out with a new video. We get so many reach outs every single day from people all over the world who are making a move to Pittsburgh, and we absolutely love it. If you're considering moving to Pittsburgh, any of our suburbs, or purchasing real estate here, make sure to reach out, give us a call, shoot us a text, send us an email, DM us on social media, however you want to get a hold of us. We've got your back when making a move to Pittsburgh. To give a brief overview, we have been seeing a majority of the home sellers and home buyers out there sitting on the sidelines currently due to the rapid increase in interest rates causing some affordability issues, but also uncertainty in the market and the economy. So we've been seeing the amount of homes actively for sale continue to increase, and this isn't because we've been getting a substantial amount of new listings, but rather the buyer pool has decreased pretty significantly, leaving more homes to stay on the market for longer. So buyer demand is slowing, but it does still outpace the supply since we're sitting on a historically low amount of inventory. So this is still causing upward pressure on home prices, leaving the market more at a stall. Now, don't get me wrong, buyers are still definitely out there. We have a number of buyers more on the sidelines, and when the properties that are listed at a competitive price come on the market, those are still getting taken up and buyers are still interested in those. We're working with numerous buyers right now and are still getting accepted offers on a weekly basis. And out of the last two listings, only 2 of them had a competing offer. So most of the properties you're seeing, you're the only one offering on, unless it's a brand new listing, completely move-in ready and very desirable, or it's in a very desirable location and is priced pretty competitively. Right now, we're going to answer 2 questions I'm answering for clients every single day, and that's if interest rates will continue to come down and what does future appreciation look like for Pittsburgh? So we've had interest rates drop from the 7% mark all the way down to the 6% range due to the latest October inflation report showing only a rise of 7.7%, which over-delivered on expectations. And this is also causing the stock market to rally. So when we talk about rates, inflation, Fed fund hikes, we're mainly talking from expectations rather than delivery. And when the market actually delivers on expectations, it usually takes that and strides on. So with that October report coming out showing that inflation has cooled more than expected is a fantastic sign for the market and the economy, because it shows that what the Fed has been doing with the Fed fund hikes is actually starting to work. And this gives us a sign that the Fed may stop raising the rates and actually wait to see what happens. So the biggest question we could pay attention to is what is actually going to happen with inflation. If we continue to see inflation go down, stay still, or do more of what the market is expecting, I believe we're going to see some major volatility in interest rates bouncing around maybe even to the 5% mark until the Fed comes out with some guarantee that they will either pause or pivot in regards to the Fed fund rate. So if rates do continue to come down, that will stimulate some more buyer demand, as a lot of buyers are waiting on the sidelines and even just waiting for a slight drop before making offers. But due to talk of a potential recession and also the seasonality the housing market, I think the market will continue to be at a slower pace with buyers and sellers sitting more on the sidelines until the foreseeable future. And it's mainly due to the uncertainty not only in the housing market, but the global economy. So on the negative side, there won't be as many new listings due to sellers holding off, sitting on the sidelines, and not putting their properties up for sale. But on the positive side, if you are a buyer right now and you're buying buying for the right reason, you have a long time horizon, and you're comfortable with your monthly payment, there is fantastic opportunities out there for you. My family and I are investors in this market, and we are on top of all of the new listings every single morning because we know the opportunity that's out there right now. Just 2 weeks ago, we got an accepted offer for $15,000 under asking price, and for a lot of my clients, we are getting at least under asking price. If not, we're getting seller assist or some favorable terms for the buyers. So it's definitely shifted from properties going way over asking price with no inspections allowed to buyers having so much leverage in this market right now. There is so much opportunity right now to get in under asking price and step into your house with more equity and less competition. A lot of the opportunity is due to the fear and uncertainty in the market, and as sellers see those days on market increase, it only brings more leverage for you as the buyer. So I'm a believer that inflation will come down and interest rates will follow that trend. But it might not be an instant situation. I could see more spikes and more falls coming in the near future. So if you are a buyer in this market, you may want to consider locking in that rate to limit your exposure to the market if it is a monthly payment that you are comfortable with. But if you are okay with higher risk and okay if the rates go up or go down, you may just want to consider closely watching the rates as they continue to be volatile over the next month. Now, taking a look at projected appreciation and depreciation, some experts are calling for slight appreciation next year, and less of them are calling for slight depreciation next year. So overall, it looks pretty neutral with upward pressure on slight appreciation. Pittsburgh being a Rust Belt city, but also a hub for healthcare, tech, schools, and just livability, it doesn't see as big upswings or downswings as many other markets. It's definitely more of a slow and steady market in terms of appreciation, which is really good. Pittsburgh's stable, and it's a market you could trust. So for example, many markets are seeing around a 6% decrease in the median sale price since last year, but Pittsburgh is down only 1% year over year. So that shows we are pretty steady and we're not seeing huge declines from the appreciation. So experts are predicting what appreciation looks like nationwide until 2026. You have the optimists saying we could expect around 44% appreciation in that time, and then the pessimists are saying around 8% appreciation. But obviously that is nationwide, which still is a good sign because everything is still appreciating. But in Pittsburgh, you could pretty much expect it to stay at pretty steady levels and slowly continuing to climb. So you can't let the fear loose fact that homeownership over time is how a majority of people build wealth in this country. We were just rated the #1 cheapest city to buy a house in the United States. So with that affordability, steady appreciation, healthcare, tech, and great schools, there's really no wrong time to get into Pittsburgh's market. Whether you should buy now or wait all comes down to if you're comfortable with that monthly payment. So obviously you could talk to some of our lenders that will dive deep into the numbers and your personal situation and give you the okay if you're good with your monthly payment to go ahead and make offers on homes. So if the monthly payment is way too much for you right now, I would definitely just keep an eye on the interest rates and what the next inflation numbers look like so that you could determine what the future outlook of the market will be. If rates do come back down, you do want to realize that there might be more competition when buying, so we could talk you through exactly how to get offers accepted in that environment. And with the latest report showing that inflation has cooled more than expected, that is a great sign that inflation may keep cooling and that the feds may stop raising the rates. So last month in Pittsburgh, the average sales price was $225,000, and that is 1% less than it was last year. So our home prices are staying pretty steady and keeping up with the appreciation that we've saw over the past 2 years. Most homes aren't receiving multiple offers, maybe a few, and that's of course if they're in desirable locations and move-in ready. On average, homes are sitting on the market around 50 days, so not much has changed there, but the hot homes currently are selling around 2% over list price, and they go pending around 37 days. Our list to price ratio is still up there around 97%, so most homes are still selling at asking price with some opportunity to get in under. But of course, it all depends on the exact situation from the seller and the buyer. And we will be doing plenty of more updates on the Pittsburgh market, especially as more inflation reports come out and as we keep an eye on the upcoming interest rates, and hopefully we could see some drop in the near future. So if you want to stay updated on all things Pittsburgh real estate, Pittsburgh neighborhoods, and what's it like living in Pittsburgh, make sure to subscribe to this channel and click the little bell so you're notified every time we come out with a new video. Make sure to like this video if you found it helpful, and comment below with your thoughts on the upcoming Pittsburgh real estate market. And if you want to learn everything else about Pittsburgh neighborhoods, Pittsburgh real estate, and really what's it like living in Pittsburgh, you could start by watching our next videos here. And we'll catch you in the next one.